Welcome to our new video. Today, we're going to discuss a very important topic related to the Companies Act, Section 135, 8, and 9, which deals with the penalties and responsibilities related to corporate social responsibility, CSR. So if you're a CA student, a company executive, or someone interested in company law, make sure you watch till the end to understand everything clearly. Section 135(7). If company contravenes the provisions of Section 135(5) and 6, then the company shall be liable to a penalty of twice the amount required to be transferred by the company to the fund specified in Schedule 7, or the unspent corporate social responsibility account, as the case may be, or res 1 crore, whichever is less. And every officer of the company who is in default shall be liable to a penalty of 1/10 of the amount required to be transferred by the company to such fund specified in Schedule 7, or the unspent corporate social responsibility account, as the case may be, or ris 2 lakh, whichever is less. Section 135(8). Central government may give directions to the company for compliance of Section 135. Section 135(9). Where amount required to be spent by the company under Section 135(5) does not exceed 50 lakhs, then there is no need to constitute CSR committee. Such responsibility shall be discharged by Board of Company. Companies CSR Rules, 2014. Rule 4. Implementation of CSR activities through non-profit organizations. Company jointly with another company. Any NPO established by CGSG, for example, Pratham Education Foundation or Project Nanhikali, etc., or any public agency established by CGSG for public interest. Eligibility: minimum 3 years of post-incorporation. Registered under Section 12A and 80G of Income Tax Act, 1961. Filed CSR 1 form with the Registrar of Companies. And have DARPAN registration under NITI Aayog. According to Rule 42A of the Company's Corporate Social Responsibility Policy Rules, 2014, every entity covered under Sub-Rule 1 who intends to undertake any CSR activity shall register itself with the central government by filing the Form CSR 1 electronically with the Registrar, with effect from the first day of April 2021. Form CSR 1 shall be signed and submitted electronically by the entity and shall be verified digitally by a chartered accountant in practice or a company secretary in practice or a cost accountant in practice. For more detailed information, visit the official website of VMK Professionals, www.emkpros.com, and always review the latest amendments before execution, as laws keep changing frequently. On the submission of the Form CSR 1 on the portal, a unique CSR registration number shall be generated by the system automatically. Rule 8.3. Impact Assessment. Company having average CSR obligation of 10 crores or more in pursuance of Section 135(5) in the 3 immediately preceding financial year shall undertake impact assessment through an independent agency of their CSR projects having outlays of 1 crore or more and which has completed minimum 1 year before undertaking the impact study. Impact assessment reports shall be placed before board and annexed to annual report on CSR. Objective of impact assessment is to assess the social impact of a particular CSR project. The intent is to encourage companies to take considered decisions before deploying CSR amounts and assess the impact of their CSR spending. This not only serves as feedback for companies to plan and allocate resources better, but shall also deepen the impact of CSR. What are the different modes of implementation of CSR activities? Pursuant to Rule 4 of the Company's CSR Policy Rules, 2014, a company may undertake CSR activities through following 3 modes of implementation. Implementation by the company itself. Implementation through eligible implementing agencies as prescribed under Sub-Rule 1 of Rule 4. Implementation in collaboration with 1 or more companies as prescribed under Sub-Rule 4 of Rule 4. CSR Impact Assessment. Eligibility criteria. A. According to the January 2021 amendment, impact assessment is mandatory for companies with a CSR budget of INR 10 crore or more in any fiscal year and all projects with outlays of INR 1 crore or more. B. These impact assessments must be undertaken by an independent agency. Timelines for conducting impact assessment. A. Companies falling in above criteria must undertake impact assessment at least 1 year after program implementation is complete. B. As per rule number 8, if companies have multi-year programs, say 3 years, impact assessment needs to be conducted after completion of 3 years of the program. Additionally, a follow-up assessment needs to be conducted 1 year after the completion of the program to better understand the program's after effects. C. The impact assessment should be conducted for those projects which have completed 1 year or for ongoing projects, period more than 3 years. CSR impact assessment expenditure. A. Impact assessment related expenditure may be booked as a CSR expense as long as it does not exceed 5% of the total CSR spending or INR 50,000, whichever is less. B. The limit of expenditure is applicable on the total CSR budget of the financial year. C. Under the amended rules, administrative overheads will now mean expenses incurred by the company for general management and administration of corporate social responsibility functions in the company, but shall not include the expenses directly incurred for the designing, implementation, monitoring, and evaluation of a particular corporate social responsibility project or program. Further, a company undertaking impact assessment may book the expenditure towards corporate social responsibility for that financial year, which shall not exceed 5% of the total CSR expenditure for that financial year or 50 lakh rupees, whichever is less. CFO certification. For more detailed information, visit the official website of VMK Professionals, w.vmpros.com, and always review the latest amendments before execution, as laws keep changing frequently. Rule 4.5 of CSR rules says that the Chief Financial Officer, CFO, or the person responsible for financial management shall certify to the board to the effect that the funds disbursed by the board for CSR implementation have been utilized for the purposes and in the manner as approved by the board. It may be noted that the CSR responsibilities of the board and CSR committee cannot be assigned to trustees. Hence, even if the company has formed a trust for undertaking CSR activities, the ultimate responsibility for such CSR activities would always be on the company. Hence, CFO certificate would also be needed in such cases. It may be noted that the CSR responsibilities of the board and CSR committee cannot be assigned to trustees. Hence, even if the company has formed a trust for undertaking CSR activities, the ultimate responsibility for such CSR activities would always be on the company. Hence, CFO certificate would also be needed in such cases. CSR audit. A corporate social audit is important because it can increase a company's responsibilities to the community. This assessment holds businesses accountable and ensures they only engage in practices that benefit stakeholders who aren't necessarily shareholders, like employees, customers, and business partners. A corporate social audit examines the following elements of a company: transparency with financial and accounting practices. A corporate social audit can determine how transparent a company is with its financial and accounting practices. It ensures that all staff members report information accurately and that the company files its taxes according to state and federal regulations. It also ensures that the company shares as much financial information as possible with the public in the form of financial reports. Transparency with product defects or other issues. A corporate social audit reports if a company has been transparent with any issues in its products or other offerings. Fair hiring practices and employee treatment. A corporate social audit can also determine if a company participates in fair hiring practices. This can include hiring employees without discriminating against them because of their gender, race, sexuality, religion, any other basis. It can also include making reasonable accommodations for potential employees with disabilities and giving them a fair chance to secure available positions. Participation in charitable giving. A corporate social audit assesses how much a company participates in charitable giving. The audit may evaluate what percentage of its profits it donates to worthy causes. It may also check to see if the company offers incentives for its employees to volunteer, like offering a paid day off of work to volunteer at a local food bank or another organization. CSR and international perspective. The corporate social responsibility is not only extended to India, but it has a worldwide accepted concept. There are other countries that also follow the concept of corporate social responsibility in their country in their own way. The international perspective to corporate social responsibility to other countries like Singapore, Malaysia, South Africa, and UK that practices CSR are discussed hereunder. In the international level, many countries come and meet for discussion on many other different matters. One of the matters is social responsibility, for which conventions are held globally. That's it for this video. We hope you learned something new and valuable about CSR compliance under the Companies Act. If you found this helpful, do let us know your experience in the comments below. And don't forget to like, share, and subscribe to our channel for more informative content on company law and corporate compliance. See you in the next video.